Alright, welcome back to the channel. There's no real intro for this, so we're going to do trade review for June 27th, which was Thursday, and I'm late for doing this, so, because today is actually July 1st. I've been a little lazy. I've kind of been reviewing. No, I haven't. I'm lying. I haven't done it since the 27th. Okay, so let's, or the 26th rather. So let's, whatever, let's jump into it. Okay, so, again, as you may or may not know, my screens for TradingView are very busy. Let me find the report here for the 27th. Okay. And then actually we'll jump over to TradingView. Okay, cool. So here's all of my trades for the 27th. Let me just minimize myself here so that we can see everything together. Okay, so this entire week, the 24th, I would say through the 27th, was a bit of a struggle for me. I was having trouble staying within my rules and just fighting, you know, the feelings of impulsivity. I lost last week, so definitely exemplified in the numbers here. So if we look over at this particular day, we've got a total of 3 trades, which that's good. I want to be at a max of 3 trades, so I feel good about that. But the total loss was $172. Total profit was $81.50, and leaving me with a final of negative $90.50 on the day. So keep in mind, I do trade all of my Apex accounts all together. So they are all copy traded. I'm currently trading 13 accounts right now. So essentially whatever you see that has happened here is what happened across all 13 accounts that I traded on this particular day. So overall, we have a win rate of 66.67%, losing rate of 33.33, and further breakdown of all of the numbers here. Okay, and this goes over gross loss breakdowns, lost trades, trade fee, and commissions. Fees and commissions. All right, so here at the very bottom, this is just going to break down all of my individual trades. So as you may or may not know, if you've been following along, I've already explained that on Tradovate, they will sometimes count what is really one trade as multiple trades because your take profits, your limit orders to get out of trades are all counted as individual trades. Okay, so in this case, it looks like on this particular day, I do not have 89. It doesn't look like I have any trades where I dollar cost averaged into it. I typically do not do that, but sometimes I've done it here and there. But it doesn't look like that's the case. So this is truly 3 trades. Okay. So what we're gonna do is let's go over to my trading view, and then we'll start to break these trades down. Okay, so my trading view is, you know, it's gonna look a little bit wild, so brace yourself. All right, so let's make sure we're on the correct date here. Okay, so we are on the 27th, and we want to be around 10:03 New York time was the time that we were looking at. Okay, so what we're going to do is we're going to pull up a new chart here real quick. I'm missing a chart. Okay. All right, so let's bring up a new M&Q chart. And we're going to take, let's go into one of my layouts that is not riddled with drawings. Let's see if we can, I think the best one might be, Yeah, actually, I think it's going to be probably my 1 minute chart. Let's do that. Okay, so we're going to go to a 15-minute time frame here, and we'll get rid of all this old stuff. All right, and then we're going to go back to the 27th, June 27th, and we'll start this at, we want to look from about 10 a.m. Actually, let's go to just before the New York Open. And then let's run it to same day, and let's do about 12. Okay, so we're looking at a 15-minute. Let's just bring this in a little bit, bring this in, bring this in, bring this in. Okay, I like it, I like it. All right, so the reason I want to start here with the 15-minute is because I want us to have an opportunity to see what the market looked like before there was any trade entry taken. Okay, so let's just take a look at this. All right, 27th, and let's go ahead and throw a vertical line right there to mark the opening. I'll just do it green. All right, so that's 9:30. That's New York Open. Okay. All right, so as we can see, I like to go back, but not too far back, right? So I want to be able to look back and see. And for me, there's no exact, point in time that I need to look from. I just want to look and see, like, where do we start seeing some congruency with the way the market is moving, right? So if we start right here, we can see, okay, if we start right here, we can see that the market, right, was up here. We had some relative equal highs here, and they all seem to have rejected from around the same spot. So we made a move down here, and then from this point, we're basically seeing like a soft uptrend, and then we get this explosive move during the opening. Okay, so if I'm looking at this at the start of the day, I don't really care about like everything that's happening before this point, right? Because depending on which time period we're looking at, we can come to different conclusions, right? And depending on just how you prefer to look at the market. So hold on, we need water. Okay, so personally, the way that I prefer to do it is I don't want to get bogged down with too much data about what the market has recently done. I just want to look at like where do we start to see like congruency. So this is where I see it. So we have this soft uptrend, right? Like not super aggressive, but we're making higher highs and we're making higher lows. Yeah, forgive me, the voice is just, it's gone. It is what it is. Well, I'm gonna try to get through this though. Okay. And then we have the open, and then we've got this huge move that takes off. Okay, so if I'm looking at this, I'm going to say that my premise, like I'm gonna go with a bullish premise. I'm gonna want to take, I'm gonna want to be looking for longs in this particular market. Now, one exception that I do make, all right, we're gonna basically let's just drop down to the 5-minute. Okay, so if we're looking at the 5-minute, oh my god, I don't know how this is not going to become confusing if TradingView is going to keep making us jump all the way back. We'll figure it out. It's okay. All right, so here we go. So now we're looking at the 5-minute chart, and this is what I'm looking at next, right? So we're looking at this is the 27th here, the open, okay, that we marked in the 15-minute time frame. So if I know that in the 15-minute time frame we've got a nice uniform uptrend, I'm going to be looking to compare the 3-minute and the 5-minute time frames to the 15-minute time frame. And so what I want to know specifically is, do I see the same, uptrend, or does it look a little bit more scattered, or does it look like we're just kind of, there's ebb and flow in the market where we're just bouncing between, levels? So when I look at this before the open, right, we're obviously going to see something similar, but I want to see how clear it is. Okay, so when I look at this, I'm like, this doesn't really look as clean as it does in the 15, but I can look at this and see that we are consistently making higher highs. We had this break of structure right here, and we popped right back into play. So I would look at this and I'd say, okay, this is pretty much congruent with the way the 15-minute looks, and so I'm not gonna look for shorts at all. I'm going to be looking for longs in this particular market. Okay, so that's how I would come up with that premise for the most part. There are some other things that I look at, but I think when I look at the 15-minute and or the 1 hour, and I can find a trend, and I can find a trend in the 3 and the 5-minute as well, I don't really argue against that. I pretty much just go with it. Okay, so now we know what our premise is, and that we're looking for up moves. Essentially, we're looking for longs in this market. So now I'm going to go to my marked up chart here, and I'm going to get rid of this extra stuff. Just try to ignore it for just a second. Okay, so this right here, this is going to mark where I actually got in the trade. Okay, so just to double check it against our numbers here. This is trade number 2, actually. So let's actually do trade number 1 first. And I think that trade was actually taken right at the open, and it was a long. Yeah, so it looks like 6:31 on the dot. So that's 9:31 Eastern time. And the entry price was 20.017 even. So let's bounce back over here. Yeah, okay, so let's find, this chart will not have 9:30 mapped out. Okay, so it's going to be this big candle right here. All right, so just real quick for those of you who are joining Trade Review for the very first time, I do leave my Tradovate screens blank, but my Trading View charts are very busy. Okay, so just to explain real quick what you're looking at, this is not gonna make the most sense to you if it's the first time you're looking at this. I don't know how and why, but I just keep shit in here, and I know what all of this means, and that's all there is to it. But essentially, the red rectangles that you see, these represent bearish Fibonacci retracement levels. The purple rectangles that you see represent bearish order blocks, and if we look down here, the green rectangular the green colored rectangles, those represent bullish bullish Fibonacci retracement levels, and the orange rectangles, they represent bullish order blocks. Okay, this is obviously down here, these lines that you see, this is the volume profile. Orange is going to be the same as green, pink is the same as red. The candles are green and red, representing green for up, red for down. There is a Bollinger Band on this chart, and we do see a yellow 200 moving average, a white 50 moving average, and a baby blue 20 moving average. And this white grayish, very thin moving average is the 9 moving average. I do keep indicators on my charts as well. I look at the RSI, the MACD, and the stochastic, and I've got like my own little system that I've pretty much developed for you know, trying to get very precise entries inside of these Fibonacci retracement and bullish, order block areas. And I'm generally, I'm looking for, you know, when we're talking about trading order blocks and looking for short-term reversals, I am generally looking for reversals, right, inside of the order blocks and the fib retracement levels, and I'm looking for continuation trends. Other than that, that's the only two things that I trade. Okay, and you'll see a lot of fibs ran all over my chart because I use fib extensions to pinpoint where I want to get out of trades. Yeah, so I use that for, you know, exit points for every single trade that I'm in. Okay. Wow, it's really difficult to get through this, like not being able to vocalize as clearly as I would like to. Okay. All right, so now that I've explained that. Okay, so we looked at the 15, we looked at the 5, and now we're all the way down to the 3-minute chart. Okay, so I said my premise would be long. I would be looking for longs only. Okay, so, and then we found right here was my initial entry. I gotta look at it one more time. So 20017 at 9:31 on the dot. Okay, so here's 9:30. So this is the 9:30 to 9:33 candle. And we're looking for 20017 should be our entry point. So I'm just going to double click on this right here, which is our long position drawing. And I'm going to enter 20017 even, and that would be the entry that I took there. Okay, so if I had run my fib extension level on this area right here, I would have come up with, I always go for the most, it would be difficult for me to really precisely explain this, but I look for the preceding leg to the move that I'm going to take, and I take the most conservative part of that leg if there are any breaks in it, okay? So I'm going to run the fib from right here, from the top of this candle down to where our low was here, okay? All right, so in this case, the levels that I would be looking for to exit the trade, the entry would be on the second green candle, and my exit would be either at the Fibonacci extension level 1.618, and the secondary one that I use is the 2.272. Okay, so this is kind of a weird, the way this looks is weird. So I can tell by the way that this looks that I entered this on the 1-minute chart. Okay, so let's bounce over to the 1 minute. And again, we're going to go to the 27th at 9:31. 27th, find the long tool. Okay, right here. Let's get the exact entry. Okay. Cool. So here's where I would be looking to take this move, okay? And the leg is going to be, in this case, from the top of this candle down to here, okay? So down to the lowest point before we get in the move. Okay, so I can tell from looking at this already that I broke my rules to a degree. So this is what my thinking was. Even though I entered on the 1-minute chart, it's all within the confines of the 15-minute and what I'm seeing on the 3 and the 5-minute. Okay, so let's just pull over I need to look at the 5 minute real quick side by side. Okay, so I'd be looking for, okay, so a pullback to the 50 moving average on both, or perhaps at least the 20 because we don't fully make contact with the 50. So we get a pullback to the 20 moving average on both. But the weird thing is like that's not even until like 9:25. I don't know, that makes sense. That second candle's not until 9:33. Okay, so I'm seeing it's congruent. I can say that I agree with it. I don't see anything that would make me think this is a bad area to take a trade from. And we're basing it off of the fact that it's a continuation move. Okay, so it's a little bit more clear in the 1 minute, as we can see in the 1 minute. So we get this bounce here, pops up, we get a bounce off the 50, bounce off of the 50. So as you can see, we're like it's the same thing that we pretty much saw in the 1 minute, just broken down a little bit more, you know, meticulously because we're looking at the 1 minute. But my thinking would have been that we hit where we needed to hit on the 3 and the 5. We had a pullback to the 20, and so it looks like I was just trying to get inside of that move. But what I can say is I think it was more important to me to get inside of this move than it was to actually wait for my rules to play out. So I can tell here, like I didn't follow my rules. If I did follow my rules, I would have waited for at least 2 candles after the bounce off of the 20 moving average in the 3 and the 5 minute time frame. And because this move happened so quickly, it was so momentous, I probably would have passed on it, simply because my entry would have required me to enter a long position outside of the top of the Bollinger Band. The RSI is completely overbought, and so is the stochastic. So I have rules against that. So if I would have waited, I wouldn't have ended up in this trade anyway. But we'll just kind of look at, you know, since I did enter and I broke my rules, we'll see how it ended. So I ended up getting out of the trade at 20.020 even. So we'll just notate that in there. And so, yeah, that's interesting. So that's my stop would have been down here. So stop would have been 450. Would have been right there. Now that obviously wouldn't have been the ideal exit, but that's the way that it ended up going, because even though I was impulsive to get into the trade, I was still kind of late in comparison to where I would have wanted to get out of the trade. So it just so happened that even though this is all of the movement I caught because I moved my stop and got stopped out of the trade before it really took off and had this really big momentous move. So it would have been a good trade, but that's one of the things that happens when I get into a trade and it doesn't follow all my rules. I'm very jumpy with my stop loss. So it doesn't really surprise me that I did that and ended up getting stopped out of the trade. But either way, the entry was invalid. But let's go ahead and just kind of notate what happened here so that I have it for my record. So it was M and Q, rules met for entry. No, it was a premature entry. Entry time frame was the 1 minute. Max risk should have been 100 for the 27th. And let's just look and see what it actually was. So the stop was 130 ticks. And that would have allowed me to get in with, I should have been in with 1 M&Q contract per account. And as you can see, I got in with 2. So I over leveraged on that, and that does matter because risk reward is, I mean, it's everything. So I definitely need to be getting into my trades with the correct amount of contracts. So the max risk, we'll say, actually ended up being 200, and the intended was 100. I wonder if there's a way. Yeah, that's cool. There we go. So I can highlight the things that I did wrong and see what stands out over time. See what I'm messing up on consistently. So was target hit? No, not at all. Next line, intended position size. It should have been 1 MNQ con, and the actual position size was 2 MNQ cons. Directional bias was, we said long, right? Yeah, it was long. Okay, so it was long. Directional bias was correct. Time of day was 09:31 Eastern time. We're going to skip the entries because it's not really that important where the actual entries occurred. In terms of just where the market was at, the numbers, I'm not too concerned about that. Profit and loss, it ended up being pretty much a break even for $12. Sheesh. Yes, that is correct. Okay, entry criteria. So it was a premature entry. Attempted to get inside of bullish continuation trend, consistent in the short term and 15-minute time frame. So it's interesting. I like the criteria. I just didn't wait for my rules to play out for me to enter it properly. Okay, exit criteria, break even, stop hit, mistakes made. We're just going to say premature entry, essentially. Notes for improvement. I think we pretty much see what it is. Premature entry is kind of the issue here. Okay, so that's going to be the breakdown of the first trade right there. Okay, let's move on to number 2. I was looking at number 2 earlier, so I did already start this partially, but let me pull this up and take a look again. All right, so the second trade I was in with 1 MNQ contract across each of the 13 accounts. It looks like this was a 828. This was an attempt at a long, and this was a losing trade. So it looks like 10:03 New York time, 1 contract, and in at 20.07525. Okay, so we're gonna put this back over here. Terrible, sad, pitiful trade. Alright, great. I forgot all my other information. Okay, one more glance here. Alright, trade number 2, 20.07525 at 10:03. 20.0. Okay, so we're looking at what, the 5-minute chart here. Yeah, I guess that's okay. Alright, so 10:03. And we went for another long. This is going to be number 2. And we got in 20.0. Yeah, I swear. Wow, what a memory. again, 20.07525, 20.07525. Really? All right, hold on. That means we gotta. I did say 20.07525, right? This is becoming ridiculous. Hold on. 20.07525. Okay. Okay. All right, cool. So my stop would have been based on. So I'm just going to carry it out just like I would any trade. So my stop would have been based on this candle's swing low right here. So it would have been. About right there, and I would have run the fib extension from this high down to this low. Okay, so that's where my fib extension would have been, and okay, so as we can see, this was a losing trade, but let's figure out why. So I'm going to jump back over to my marked up chart that goes crazy, and let's get rid of these old fib retracement levels. All right, and this here is going to represent So I'm going to look at this very quickly because I know anybody looking at this with me doesn't know what the hell they're staring at. But again, what you can take from this is what you should be doing in your own way to review your trades and break your trades down on a daily basis, or however often you trade. Looking for holes, looking for weaknesses in your trading, not just the strategy itself, but the way that you're executing it, your stop placement, everything. Okay, so I'm looking here. So right here represents my entry. Okay, this is where I entered into this trade. So what's the logic behind getting in the trade? So my premise is the same. I'm looking for an up move, and it looks like once again we get a pullback to the 20 moving average on both the 3-minute and the 5-minute. Okay. And then from there, we're looking for the bounce up. So I don't necessarily see anything super wrong with this entry, but this is the part where I get very meticulous about little things like the stochastic, right? When I get down to the point where I'm about to make an entry, I care about the behavior of the stochastic. MACD, RSI are not really that important for me when we're talking about a continuation move, but I do care about what the stochastic looks like. And granted, that has nothing to do with market structure. It has nothing to do with imbalances, liquidity pools that the market is chasing, etc., but it's something that I look for when we are down to the point where everything, all the other rules and criteria has been met. I want to see that the stochastic looks a certain way. I guess, let me point out what I'm looking for, and I'll just do a comparison between the two. Okay, so we get a pullback to the 20 moving average, the blue line here. We get 2 consecutive green candles, which I like, and that's where I want to enter. Okay, now notice how right here, right, this is about where the entry takes place. But notice how we have a nice cross on the stochastic here, right? If we look at the same spot right? The cursor is going to line up on both sides. On the left, what you're seeing is you're looking at the behavior of the stochastic in the 3-minute time frame, and then you're looking at the behavior of the stochastic on the 5-minute time frame. So if you notice, on the left side of the screen, the 3-minute stochastic has completely crossed, and it looks like it's ready to continue moving up. Now, if we look over here at the same spot on the 5-minute chart, it doesn't look as certain. Now, I'm certain that anyone listening to this would be like, that is so minuscule, I wouldn't even pay attention to it. But this is the thing. We have all found different things in our back testing. And one thing that I look for is I like to see congruency across the 3-minute and the 5-minute time frame when I'm taking entries. And I do include the behavior of the stochastic. So when I'm looking at this, like in hindsight, to me, this suggests that this wasn't quite ready for an entry. I would want to see a cross. I would want to see this blue line cross up and through the orange line, and I'd want to see a candle close with that cross still in play. So personally, that's what I would want to see. When we look at it, however, we can see that by the time we do get a cross on the stochastic on the 5-minute side, we're all the way above the Bollinger Band. And again, I personally have a rule against that. I want to know that my trades have plenty of room to breathe and that they're not exhausted in the direction that I need them to go in before I enter. So with all that being said, my conclusion in hindsight is that this just wasn't quite ready. And a lot of times if I drop down to the 1-minute time frame as well, and I look at the same exact period, so let's find 10:03. All right, so it's about right here, okay? And usually if I feel a little bit confused, I can refer to the 1-minute just to kind of get like some extra support in what I'm seeing in the 3-minute and the 5-minute. And again, what we see here is we see very soon after, we see that this candle it's outside of the Bollinger Band at the top. The RSI is overbought. The stochastic is overbought, not extremely extended, but overbought. So to me, what this is suggesting is that even though everything else looks good, it's overextended and it's not worth taking a chance on. I said a lot of words just to get to that, but that's pretty much the point, okay? It's overextended. And so what I would want to see is I would want to see the trend stay intact and for there to be a pullback and for me to get in deeper into the move, right? So that's what that's making me think. So if I look at this and I ask myself, were the rules met for entry? I'm going to say no. I think it was premature in the 5-minute, and I'm looking for the 3-minute and the 5-minute. I'm looking for congruency between those two when I take entries. So we're going to say no on rules met for entry. Stock rules were missed in 5-minute time frame. I don't know what the right way to say that is. Missed. It was premature, just not ready. The entry time frame was, did I say I got, I think with this one I actually got in on the 3-minute time frame. So 3-minute time frame, which inherently for me goes with the 5. The max risk was intended to be $100, and if we look at how I would have run my stochastic here, what is the low on this candle? Oops, moving stuff I didn't intend to. Alright, so right now I'm just looking for the intended risk reward on the trade, and it looks like at minimum it should have been a 1 to 1.29. So risk reward 1 to 1.29 minimum. Was the target hit? No. Intended position size. Stop needed to be, did we run the stop on that? It would have been below here. All right, 28.50 would have been the stop. Okay, and that would have given us 187 ticks, which to get a max risk of 100, we would have needed to be in with one contract, and one contract was used indeed. Good. Like to see myself not being greedy. 1 MNQ con, actual position size was 1 MNQ con. Jesus Christ. Alright, cool. Directional bias was also a long. And profit loss, it was a loss of, oh my god, what a struggle week, $172. Terrible. Alright, entry criteria, it's literally the same as the previous trade. So it's the same entry criteria, attempted to get inside of a bullish continuation trend, which was consistent in the short term and the 15-minute time frame as well. All right. So I wrote some notes here earlier. So mistakes that were made. So entered prematurely to stock rules. Behavior deviated from entry rules. Notes for improvement. So based on my rules, I made no mistakes in entering this trade. The problem made was more intuitive. Okay. Which I don't see happen often, although this setup looked fine. There has been a massive move to the upside, eliminating all lingering liquidity pools for the day. The only liquidity was at the bottom, and when the market created displacement followed by a break of structure, with the fair value gap, that should have been the whistle to exit the trade. I was looking for something different in terms of the indicators to pull me out of the trade, but in this case, it was market structure itself, which basically gave the massive, gigantic flag that was waving like, hey, get out of this trade. Again, odd, as usually the indicators will indicate extremes first, but this will be another lesson learned to add to the tool belt. Okay, so that's what I took from that trade. And again, looks like the thing done wrong here again had to do with kind of just being patient enough to just wait for everything to play out within my rules before I enter the trade, or to just let it pass. And that I did not. Okay, so we're going to move on to trade number 3. All right, so trade number 3 would have been, let's make a quick correction on the risk reward for number 2. Okay, and that's what it was after I adjusted my stop there. Okay, number 3, the last trade. Okay, so we have a position size of 1 MNQ contract across all accounts. This trade was taken at 8:42, which would have been 11:42 New York time. So 11:42, and we have a long here. So 11:42, 19, 98775. 1142. Do I already have it mapped out? 1140. It would have been over here. 1142. 19. 9. We'll put it at 85. I'm going to delete this one back here. I don't know what that is supposed to represent exactly. 19, 98775. 987. All right, there's our entry. Okay, so most of you are familiar with TradingView. I'm just going to map out what the entry and exit, where the stop would have been for this trade. So I'm looking for the swing low, which is here, which is at 19954.25. So we're going to take this down to 44 even. Okay, and that gives us a stop of 175 ticks, and then we would have taken our fib extension tool here, and that's how we would have gotten our exits. And real quick, I'm going to just come over here to the 5-minute and make sure I don't see anything out of whack here. Alright, so I'm looking for congruency between the two. I want to see the stochastic is oversold. I want to see the RSI looks oversold to a degree. And I do see that on both here. I do look to see if they are tapping any moving averages specifically. I don't see that. It looks like they're both below the 200 moving average, so I'm not going to pay too much attention to that. We do have a push outside of the Bollinger Band. I like to see extremes. I love to play off of extremes. So we get a push outside of the Bollinger Band. We get 2 consecutive green candles here. We get nice downside volume here before the short-term reversal. And I like the way that that looks. So I entered here on, which looks, I guess that's not premature, is it? No, it's not. That's perfect. All right, cool. So now that I can see that we have agreement between the 3 and the 5, and I can see everything is where I want it to be, let's just open this up on the 3-minute. And we won't focus really at all on the indicators anymore. So just remembering what was kind of taking place in this trade for me. So a lot of times when I'm marking my fib retracement levels, I'll typically only do from the 68%, or I'm sorry, the 62% level up to the 78% level. And the market does experience a lot of reversals around the 50% fib retracement level as well. I just don't always map the 50% out on my charts. So if we look here on the 27th at 11:42, we can see, if we open this up on the 15-minute chart, we can see that we've got down here, we have bullish Fibonacci retracement levels inside of bullish order block levels, right? So I identified bullish order blocks, and we have overlapping bullish Fibonacci retracement levels as well. That's what I mean to say. Okay, so we can see that the market taps into the bullish order block right down here. So while the 15-minute shows this very quickly, or very clearly, hold on, let's make sure we're 11:42. Yeah, so this is 11:45. Yeah, so we can see at that time we're tapping into the bullish order block here. And so this would be, granted all the other, criteria is met, this is where I would be looking to take a long. So the 15-minute shows it very clearly. This chart here, which has the 3, we're looking at the 3-minute here, but this was mapped out using the 1 hour, and I did not include the 50% retracement level, so just keep that in mind. So I'm trading and I'm bouncing back and forth between my charts, so I know that we're in a bullish, we're inside of a bullish order block and we're inside of a bullish Fibonacci retracement level, and so that is why I'm trading it like an order block play. Okay, so what I look for typically is once all of my other rules are met, I'm looking to see 2 consecutive. In this case, we're looking for a bullish move, so I'm looking to see 2 consecutive green candles, and looking for a bullish push that hits, you know, my targets before it hits my stop, of course, right? So in this case, we can see the stop is down here. We get a nice bullish move up, and if I were to mark where my most conservative limit order would be, it'd be right here at the 1.618 Fibonacci extension level. So this level gets hit later, but this would not have been hit in my trade. We would have been just short of it. So what happened in this trade was I decided to trail the trade. So when we got up to, I want to say, it was probably somewhere around here. I believe this is where the trade pulled back and I got knocked out of the trade. So it was a good trade. It just didn't make it the distance that I was looking for, but it was still a profitable trade, and I think that it was managed well. If I wasn't down on the day and I hadn't lost $172 already, plus whatever other small amounts I had lost, I probably wouldn't have trailed it. I probably would have let it run a little bit more. But as you can see, like at some point I probably would have began a trail, just not as conservatively, and it looks like this is kind of the general area where, you know, the trade really pulled back anyway. So I don't think the outcome would have been much different. So could have been better, but not a terrible trade. So rules met for entry. Yes, the rules were met in this trade. Entry time frame 3 minute, 5 minute. Max risk, it should have been $100. Let's see what it actually was. 175 ticks, which would have put me should have been 1 MNQ contract, and we do get 1 MNQ contract here for the trade, so good. So I'm in with the correct amount. One more peek at that, and we should have had a 1 to 1.87 at minimum. Target was not hit. Intended position size 1 MNQ con, actual 1 MNQ con. Directional bias, long, time of day, what do we say, 11:42 Eastern. Profit, loss, I believe it was $69 to be exact on this trade. Let's just double check. $69.50 right there. Okay, entry criteria. Okay, so it is the same. Oh, I'm lying. No, it wasn't. Entry criteria. So we were inside of a bullish OD overlapping a bullish fib retracement level. All lower time frame rules met. So essentially all of the rules were met. There wasn't anything that happened in the entry here that I feel questionable about. Everything was on point with that entry. Mistakes made, possibly trailed too tightly, but I think in this case that was the quality problem. Notes for improvement. I don't really think there's really much else to really do with this trade. Again, if I wasn't down on the day, I wouldn't have trailed so tightly, but I was down, so I had to trail tightly, and it is what it is, right? When you're down and it's the end of the day, you're taking your last trade, you want to lock profit in, you know what I mean? Because like if you don't have to go into the next day negative, then you don't want to go into the next day negative. So that's the thinking, that's the premise behind that. Okay, my God, this feels like a really long trade review, but that's pretty much how that went. So if I had to, summarize, how do I feel about this particular trading day? This was another one of my, how do you say, more undisciplined days. It could have been better, but it was an improvement from the previous day, which was completely out of pocket. So I'm happy for that. So again, newer traders, this process, if you watched this whole video, then you know that like this process is not, it's not like a fun process, right? It's not like you're not having a blast when you're doing trade review. You're looking for holes. You're looking for holes in your technique, in your strategy, the way that you enter trades, the way that you manage them, the way that you exit the trades, the way that you're looking at the market, the way you perceive the market structure, whatever the case may be, whatever tools you use or whatever strategy that you use, you're looking for holes so that you can improve yourself over time. And you're just collecting data. And so as time goes on, you're going to collect more and more data, and you're going to start to see correlations in, losing trades, and you'll see correlations in winning trades. And the goal is you want to make the winning techniques, use those as much as possible, make them better if you can. And the things that are losing you money, that are costing you money, right? You want to start to either eliminate those things entirely, or you want to really start to take a very deep look at it and see what you can improve. That will make your strategy stronger overall. Okay, well, shit. Thank you for bearing with my barely existent voice here. But again, I do want to stress that like I really, really, really believe in the journaling process. And for the newer traders, or even traders who've been trading for years, if you're not doing this and you're not consistently profitable, or even consistently just staying afloat, I challenge you to start doing this. Go through all of your trades every single day so you can start understanding your habits like the back of your hand. And I promise you, if you put the work in and you dissect your trades and you make changes where they need to be changed, and you take it seriously, this will make you a better trader over time. Because this is not based on anyone else's data collected. This is all based on what your trading performance is. And this is the way you tweak your current strategy to get rid of the weaknesses and enhance the strengths so that you can get better and better over time. Okay, well, I hope that this video did provide you some value. I know this was long and it was not very fun to go through, but it is what it is. This is the process. And when we all get into trading, we're like, oh my God, right? Like we probably experienced a trade or two where like we got in the trade and we made some really quick, easy money. And we're like, trading is going to be so fun and exciting. I'm going to make so much money so quickly. And what you end up realizing as you become more and more of a professional trader in your ways, right, is that, trading is like anything but. I mean, don't get me wrong. There are times when I'm up on the week and I'm in a really good trade and it's like Friday, and I know that like nothing bad can happen because I'm already way up for the week and I'm in another, winning trade that has like a break even, stop loss on it. And in those moments, like I will let myself be a little bit more unfocused and just enjoy the moment. But for the most part, guys, like this really boils down to like patience and discipline. If it was about anything but, if it was about having the correct strategy, we would all be profitable. We'd all be making money consistently in the market because there are winning strategies all over the internet for free. So that just goes to show it's not about the strategy. It's about the person who's trading the strategy, right? And when you're in the market, it's about waiting for your edge to show up, which means waiting for your trades to show up so that you're not just jumping in the market and taking any impulsive chance that feels good in the moment, right? That's where the patience and the discipline comes in, right? Patience to wait for the correct entry, right? Patience to sometimes even look at a market and go, this is not for me today. Today's going to be a no trade day. This is not the day for me to jump in the market. And so having the patience to wait until the next trading day, or perhaps, maybe it's just whatever the market is doing at that particular time. And maybe you need to wait until after lunch, or maybe you need to wait until, an hour or so goes by for the market to get into, a different rhythm. Discipline is you doing the due diligence, right? To become educated, to study yourself as a trader, to know what works for you and what doesn't work for you, to back test as much as you possibly can, to collect data, right? On the way that you trade, specifically your strategy, the instrument that you're trading, the market, the time, the session that you're trading, all these things that are specific to you, and actually having the discipline to follow your findings, essentially. So if you went into the market trading one way and the information that you collected suggested that you don't trade that way anymore, or maybe you have a particular rule, and maybe it's not serving you well, right? And you back test and you collect data, and the data suggests that you change something or you do something this way. Discipline is actually carrying out the way that you've trained to perform in the market when you're actually live in the market. Because it's very easy to click the button, and you can do whatever you want to do in the market, really, up until the point where you have no capital left. So you need to have the discipline to follow the structure that you've created for yourself that gives you the best odds. Okay, all right. Well, I'm done because I can barely talk. So thank you for joining again. I hope you got some value out of this. I hope you are doing journaling yourself, and if you're not, then I hope you will start. Even if it's half-assed, even if it's a little bit, it will make a difference. Don't do it half-assed, but a little is better than none at all. Okay, guys, I will see you guys next time, and thank you for joining.